Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening. And we're here now on Thursday, and we're at the 24th of October, 2024. And what a time this is in the marketplace, right? So now we're trading the election. We're trading who's going to win at any day in the daily polls. We're a week and a half away from hearing what's going to happen. The race is so close, it almost begs that there'll be a contest, and whoever loses will probably ask for recounts. It would have to be a landslide, and I'm not seeing that unless the polls are wrong, and they are often wrong, so you don't know which way that'll quite go. I do hear that in certain states, a lot of the mail-ins have gone. I did my mail-in today, so I know that I've joined that crew. But if you're trying to make heads and tails of some of it, well, it's not that difficult because the stock market is held up. Yeah, we're getting a correction, in two of the indices. We're seeing that, especially the Russell. All right, you know that you were up today in the NASDAQ because of one word called Tesla. 22% gain in the stock price today? Come on. You get that type of gain, you're going to carry certain indices with it. Those that don't have Tesla and a heavy weighting, they didn't go anywhere today. I mean, it's pretty simple to see that. And that's because people are in love with Tesla. But remember, Tesla doesn't always go up. This is a stock that has come down rather dramatically from its peak. So now the question is, by the way, I don't know if you're aware, today with that 22% gain for the year, it's only up about 4.5% for the year. So if you think that, hey, Tesla's just been going up, you wouldn't be right on that. What we do have tomorrow, and we should take a look, is we're going to get the advanced durable goods data. That's going to come out at 7:30. University of Michigan, final October. And the word is final. Remember, this isn't the prelim, which is where you get more action. This is the consumer sentiment indices. They're going to come in, they think, fairly flat. For those of you that trade the meat markets, these are the cattle estimates for the cattle on feed report that'll come out tomorrow at about 2 in the afternoon, Chicago time. All right, so we'll see just what that offers. But that puts you where, if you're paying attention and you're watching anything, if you're not just a futures trader and you're in the financial futures, for example, you know that this is the earnings week. This is a huge week. Every day, big companies coming out. What are their numbers? Which way is it carrying the market? UPS out of left field today had a wonderful showing, but they have been getting beat up recently. So you're getting these rotations with different companies that are coming in and surprising with some of the numbers as they're coming out. When we go to the S&P, I think you can see the market's backing off. It's down almost 1% going into the end of the week. When you look at the chart, you can see how the chart has backed off now. You have a pattern of lower highs, lower lows. That's not bullish. The market is fighting a battle. When this began correcting, I said it'll probably go back to the 18-day average right here, and it'll fight a battle there for a bit. I think it's done exactly what we said. It peaked out against the upper Bollinger Band, came there, and when you lost the bullish embedded reading, this is important. Now pay attention. You have to learn, in my opinion, how to trade. You're trading with one hand behind your back if you don't learn how the Bollinger Band and momentum tie together. Because often momentum will give you the move before the price occurs. It is not price moves to the momentum. It's just the opposite way. Does that mean you don't get instances where it can be different? No, but I'm giving you what the norm is. And when you lose this embedded reading, to say you're coming down happens. Now, could it all happen that it goes to that 18-day average at one time? Yes. Is that the norm? No. Generally gives you a day or two, sometimes more than that, warning. I know I was playing Rivian recently, and we had one of these, a lost bearish one. Took a while, but boom, it finally happened. The market made not a huge move. It's a $10 stock, but it was a good way to pick up quarters. Let's put it that way. When you look over here at the NASDAQ, higher high, lower low. So you're sort of stuck right in here, not really going anywhere. The Dow, does that look bullish to you? So please don't get caught up on any one day's action at an election time and in the midst of earnings. we got to get through the hump of earnings. This is the biggest week of the time frame. Then it starts trailing off, and that's what you want to get into. Of course, NVIDIA is the last one that reports, one of the last. So everybody will wait to see that. And look at the Russell. Does that look to you like it's doing something? No. So this is a good time for me to tell you, I'm going to take off next week. I want to be back for the election, the post-election. I expect more of this to be happening. I haven't had a vacation in basically a year. I went away to Montana, and one tornado hit Chicago proper, my block, my house, and I had to run right back and take care of things. We're still dealing with that, with the insurance companies and so on. But I need a few days. So I haven't seen my son, so I'm headed out west, going to go see him for a couple of days, and I'll be back. You will get me putting out tomorrow for the weekend, the weekly edition, and I will be back to put out next week's weekly edition. So it'll be 5 days. I'll put up something for you to know about, and then I'll be refreshed, ready to talk about what's going on there. But I thought a good time to let everybody know that. You had your bearish crossover, and the market hasn't been able to rally. You still have the embedded reading. I know traders are trying to be bullish this market, not me yet. You can get bearish reactions at any time, but when you have the bearish reading like these, until that red line's over 21, what do I think? I think the rallies get sold. Now, in the dollar index, you're getting a bit of a correction. See how the red line's leaning down? If it drops too much, you could go back into the support here. If it comes down, as I suspect, and doesn't lose the embedded and starts turning up and away you go again. This is still a very bullish setup, hasn't given that up. And the bearishness in the euro, well, you got to be careful. This is what I think the dollar is going to do. The euro's open, the dollar isn't. You're back to the 20 level. Doesn't lose the bearish reading, or did the pros step in here to sell the market looking for it to fall further? I'm of the camp that they're going to sell the market looking for it to fall further, and this is a bump in the road and not much more than that. If it isn't, then it either re-embeds if it gets over 21, which you can only do 1 day to do that, or it goes back up here. So we'll see. Right now the charts look bearish to me. The British pound is stuck. How many days have I told you? It's caught right here at the 100-day average. So most currencies that have fallen against the dollar are getting a slight bump in the market. Will that turn out to be anything more than a slight bump is actually the biggest question that I don't have an answer to. You're losing the bearish reading. You got a 24 reading. 24 is enough to make you want to take some money off the table if the market's going to rally up. Now, it can rally, get back to the 18-day average and fail again and start coming down. Obviously, I am in the camp where the market's going to get bigger cuts from the Bank of England. We're going to very shortly hear from the head of the budget committee, and we're going to hear what they're going to do. They have a huge shortfall in their budget. They're going to raise taxes. Anything they do to fill that hurts the economy in some manner. So what are they going to do? I think you're just looking at time right now, and the market's seeing profit taking as traders go, maybe it's a time to back out. A guy like me wanting to take off, there's a reason. Why get chopped up right here? But I'll be back. It's 5 days. That's it. By the way, if you're a subscriber to my research, you'll see I'm taking care of you. I will look at the markets. I'm just not going to record videos. So when I do my writing, I won't write about them. Here's the trades. Here's what I see, and I'll cover everybody with that. Higher high, lower low, and that's where the market's at. Okay. Are you embedded? Well, no. What the market is it's overbought. I don't see a thing to do just yet. In the Brent, this was what often happens. This is when I was saying the dollar might fall here, euro coming up. And when they do, if they were embedded, this is what I would think they'll do. They'll come back to fight at that 18-day average if they lose their embedded reading. It's so important that you learn Bollinger Bands and momentum together. They really tie a lot. So this call up here was not a difficult one. That's where I thought the market was going to go to fight a battle, and that's where you're at. You're in the battle. You had a huge outside day down today. If today's high is taken out, then you can look for these other averages. If not, you're not trending. I would just stay away from it. It just seems to be now a whipsaw there. Same thing in the WTI crude. Heating oil, the same thing. And they all had outside days, as you can see, to the downside. Not the nat gas. So I think the pros went short now. Now, I think it's a little early for the average guy, but if you're going to, this is the area I think it's going to fail at. Even if you get over this number here, which is about the 315 area, I don't see a lot of upside on it after a big rally like this, but we'll see what happens. You've just gotten both numbers out of the 30 level. We were looking for that. Now, if you walk back with me, because this is so important, watch. That's what I wanted. You're embedded. When you lose the embedded reading, which you lost it by a 22 reading, and you come in, you see it right there. I'm trying to teach people this. That's your signal before prices make the move. Now, sometimes it all happens in one day. It's rare that it does. But my work is screaming, not saying, it is screaming that price, and I said this yesterday, should make an attack of that 18-day average before you get back down here. When you lose that, that's what I'll come out and say. Tell me it didn't occur. And that's where the market stopped. That's what a trade like that is worth, but that's an edge in the market. Now, my slow stochastics are different than yours. You need my formula, how to do it. I give that to the subscribers of my courses. And in the course, which I'll talk about at the end of this, I'll put up something for you. You learn how to read the slow stochastic, what it means against the Bollinger Band. It's not always the 18-day average. It's which key averages will it look at depending on where price is. And I go through that with you. And then you get to see it happen in real time because I let you come into my morning subscriber videos for a while, and I make sure that you understand what I'm teaching. So you put that together for yourself, you get a game plan, and you try to work with it. Again, learn. That is the key. Take a bit of time off for yourself. Learn this. Once you learn it, start gradually applying it. Okay, I don't care if you paper traded it first, become a believer, or just say, nah, that's not for me. I think you'll believe in it. With that, take a look at this and join. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.